All right, folks, hey, welcome on back for another fantastic edition of our weekly workshop Traders Talk. Monday, November 17th. Pop the webcam up for all of us back inside our live trading room. Great to have Barbara, Bill, Kathleen, Tim, Bob, Margaret, Andrea. Did not think of it, Andrea. How could you? It's every Monday. How dare you, Andrea? No, I'm teasing, of course. Normally, every Monday we're on here, though. Great to have all of us out here, students and members, especially Andrea, as always. In mind, though, inside our live trading room there and on social media, Facebook Live, LinkedIn, Twitter, YouTube, X, wherever you may be residing on the social media, on the internet streets out there at Cyber Trading U. We are on YouTube, LinkedIn, X, etc. So just make sure to hit the follow or subscribe button down below. But with that said, a couple of things to begin here on the ANVS stock. This thing pushed up pretty nicely here for us today, like kind of more from the market open hours, very lackluster pre-market, so kind of came out of left field, but ended up providing as a great trade for us. I think that we had called this one out a little bit after the market had opened up, didn't we? I think I had typed this in here around 9:54 in the morning, so it wasn't immediately at 9:30, but pretty much just shortly going into the first hour. We had mentioned ANVS. That was the first post that we had on it right there. So let's just say right at that 9:54 time, I call it out. It's already popping. It's a moving. Well, how do we trade this? How do we trade this stock, and how do we understand that it can make the type of move that it's making right now in front of us here? So, to begin, something like this, cheap stock around these prices, where would we normally find our big iceberg orders, folks? For Leda, Bill, Roseanne, Jim, Lee, Sharon, all of us here in chat right now, for a pretty inexpensive stock like this, where would we normally find our big iceberg orders out there on level 3, level 4? What do we got? 50-cent levels and whole numbers, right? So this is already pushing up. It's going up. I call it out, right? I guess on this candle, 9:54, I found it. So looking at this graph here, only at this picture, the stock's moving up. It closes on this candle at like 294. It popped up as high there. Where do you think is our next resistance when you look at this screen here, when you look at this chart, the way it's going up, 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 up? It kind of moved up towards 295 or so here, maybe a little higher perhaps there. What would we say is our next big 50-cent level or whole number level, right? It's obviously this right here, 3. I was trying to kind of hide the fact that it topped off right there, but exactly. So right at $3 is immediately where we should have our next level. It was already moving up to begin. I know I called it out here, so we're off, we found the stock a little late. We're a little late to the party here on this move at first, but that doesn't mean that we're there at the end of the party. It doesn't mean that we can't get a piece of the pie afterwards. So, hey, right away, we have resistance at 3. Just we figure that at 50-cent levels and at whole numbers, that's typically where we would find them. Now, I don't even have this up on my book map right now. I'm popping this up right now just so you can see. All right, so what do we got? Where do we have our icebergs? Where did we have our iceberg? Because we assumed for there to be 1 at 3. That's an assumption. So it's basically to say, it's like the old catchphrase. It's like kind of cheesy, but it makes sense here. When you get lost in the woods, you look up, you find the North Star, you find your way home. So when you get lost in the woods, when you're trying to find your way home, and when it comes to the order book, your North Star here for cheap stocks like this, it is 50-cent levels and whole numbers. So I'm assuming 3 is going to be a big resistance. And hey, it hit 3 as a level here and backed off on this candle. But I'll tell you, it looks like we did have an even larger order out there, but even at the price 280. So 280, when we actually look on Bookmap and see where the real icebergs or real orders are alike, well, hey, 3 could and still should be a level. But at 280, there's a 48 plus thousand share seller here. It already got broken over. So the stock already broke over that price. It's already moving from it afterwards. Pretty timely, because even when it comes to just a regular good old chart, we treat it the same way. So when a stock breaks over a resistance level, whether it be from the chart, whether it be from the order book alike, and the stock runs from that resistance, what are we looking for that resistance to flip into? At least initially, right? We just went over this in class. Margaret, Lynn and Randy, Bill, Barbara, Grant, all saying support. Absolutely. So, hey, we came into this trade, I guess, on this candle 9:54. So it broke over this resistance, was already moving from it. There is a case to see this pull back and flip 280 into a working support. I know you could say this candle kind of it did that already. but it didn't exactly like run from it. The more it pops from the level, I would say, is a definitive break over resistance and run from it. So even as it hits three, it wouldn't shock me if that 280 could flip into support. Now, otherwise, though, the only other thing I'll look at here is like, where did we have our levels on the daily chart? Because it came out of left field, came from nowhere. So it wasn't like a big gap up in the pre market hours. So this blasted over a couple good resistances. I would even just say here. And that coincides perfectly with your North Star, pretty much right there at three. 295, $3. That's just more from the daily chart. Then otherwise, I don't really feel a need for anything below that, like 250s. I don't think it really came back down that low. So basically, it's to tell you that this area here represents a historical area. I'll basically just delete this line even and just say $3 because that was a top back from the daily chart there. That also is a assumed level just from where we would normally expect to find icebergs anyway. But otherwise, if it stays over 280, then perhaps it could build better support there. All right. So what happened was, follow along. This didn't come back down exactly to 280. This didn't go under and over 280 after here. It didn't pull all the way down to build support to go back up. That's fine. I mean, that would have been great. I would have been a huge fan of that. Just doesn't do that here, right? So this is where I'll tell you the first time a stock is breaking over a big level, we would normally expect for it to be a head fake, right? The false breakout at first. Then the more that the stock is nipping and testing that level in a smaller period of time, I feel a lot stronger about that breakout. So even here, this whole thing here is just pretty small time frame. It's not really this big of a amount of time here. It's probably about what, like 30 minutes in its entirety, but it tests the level even here at 10 o'clock, pulls back, comes back up to it around like 10, 11 in the morning. Even if you were here, right place, wrong time, even if you had jumped in over three right here and took a small loss thinking like, oh shit, it might reverse, you end up getting that better move because the stock is doing exactly what we teach, exactly what we just taught you in class, not even like what we generally teach. Keep in mind, we just completed our phase one stock course, lesson number 5, just about 30 minutes ago, right? So we went over core charting principles, month of November right there. This is our entire course schedule here laid out in front of you, but we just finished up lesson 5 about like an hour ago, maybe 30 minutes ago at that. So we were talking about this. The more times that stock is banging its head on that resistance in a smaller period of time, even, that's where you feel even stronger about that breakout. And not only that breakout over this level here, over $3, but one more time, hey, if it breaks over a resistance and runs from it, then perhaps you could see that resistance flip into support. So, truth be told, listen, hey, going into the morning today, if you were hyper focused on this ANVS move, I would have been looking for 280 to flip. I would have been looking to see this crash into that 280 under and over. But if it's not going to make that exact move, then you have to think about what the next level is from there. And that's exactly where we see this run into like resistance from the daily chart. It's like 295, but it's $3, this area here. So, hey, the more it keeps banging on that door, it's going to break through it, move on up to the next resistance, right? So that's at least what happened earlier on today. As we were in class, this was flipping that resistance into a support, moved on up nicely from there. Where was our next resistance, though, on the ANVS, though? Because this thing looks like total garbage after. It really does. This is not easy on the eyes. This doesn't give me any legible read on this move here. Where's the big money? If our whole philosophy is to follow the big money, and we're seeing these tiny little red and orange lines pop up for like a cup of coffee and they disappear, that doesn't give me anything to work with. This gave me a lot to work with earlier on today because A, this is a pretty big size, 45,000 shares, but B, it's out there for hours on end. So it would lead me to think that that would be a pretty respectable level to look for today. It just never really pulled back there. That's all. Now here, though, this is where if you can't use Bookmap and it's still moving up nice, it's still gradually going up, 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 up. This is where I'll tell you if there's nothing else that looks easy to see, then I'll keep my focus on 50-cent levels and hold numbers. And then I'll also keep my focus just on the daily chart. So even here, look what happened. The first time it went up to resistance at $4 at least here, it crashed right into it. Maybe not even a head fake. It looks like it just touched it, then came back down. Perhaps here at 350, if there was an iceberg here, and if that iceberg got broken through and it ran from it, resistance could flip into a support. It tries to do it here. Okay, there's a chance for this to pop back up. But if the buyers are losing control of this move, then the more that this keeps getting pressed and poked, then the sellers are going to take over. Let's look at the daily chart next. Again, we just kind of focused on that one level here, basically three. Well, yeah, pretty much right around. Actually, I won't even say 350. It kind of peaked here, but look at these candles. 1, 2 in red, and then the skinny wick here, green. I would say that's a tighter consolidation of highs. Oh, especially right here. Look at this, where it got crushed, went all the way down much lower, but this one wick too contributes to that. So I would say your next somewhat good chart level seems to be right around this 335, 340. Hey, it blasted over that with ease and ran up nicely. Look what's flipping into support right now. So this move isn't totally done with. This move isn't done with at all. In fact, I mean, just looking at the volume or lack thereof on Bookmap, it's really tough to trust any of these prices, even if you're using the CVP level here. Even if you're using the CVP level, you happen to have like 370, maybe sticking out there a smidge, maybe a little bit there. That doesn't really give me as much to work with though. At least when I look at the daily chart, again, the tippy top doesn't need to be the strongest point, doesn't need to be the resistance. So it's a matter of consistency. One, two, three. That's all within a much tighter price range there. And then even this one here too will count towards it. So that is what I'm kind of focused on now, is like a chart level. Now, if this slash is right below this here going into the afternoon, then it's game over. It's definitely game over. So we'll take a look just lastly here. The only thing I guess I can trust, watch this. A sec. Oh, you know what? Bookmap. Tisk tisk. I gotta kind of do it through here now. Do the AV WAP here. All right, give me a moment. Do that. So this should anchor up with a VWAP line here in a bit. So the VWAP at least aligns up pretty good. It aligns up pretty well with where it's trading at right now. So hey, if it holds over the VWAP, hey, if it holds over this chart area here collectively, right, historical chart level plus the VWAP line, then there is a good shot for this to move back on up heading into the afternoon. So I'm not totally writing this one off just yet now. But as far as earlier goes, yeah, I mean, there was a pretty good level that we could have taken the trade from. Didn't pull all the way back down there. That happens. And then from there, just the next level up, that $3 level became a much better entry level to take this from. Just it required a few stabs of resistance. And then once it broke over it and ran from it a bit, then from there, we saw the flipping of that resistance into support next. So, pretty good move on the ANVS overall, right? Now we had the ANVS trade. We had a couple others, and even stocks that moved with the market. I just want to go over a couple of the others though that we had. The AMIX was a nice pre-market trade that we had going into the opening bell, but it fizzled out a little bit quick. So very similar with the other trade that we just had. Focus at first on your 50-cent levels and dollar levels, right? So once it broke out here this morning in pre-market, we were talking about what's called the under and over. It's kind of what I wanted to see, at least on that ANVS trade from 280, where it comes down to that resistance that it broke out from, and it will hold it. It will basically hold it, but it will come into it first, under and then back over the level. So pretty much right here at 9 o'clock in the morning, AMIX here made an under and over. It broke under this level. It broke above it. It ran from it. So you are looking for support here, but it broke under, and then on the break back over here, that would have been a pretty sweet entry to take. Then obviously, the more it goes up, 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 at least the first test of resistance, you should expect to see that hold, hit resistance right away here. Weak break over, came back down, strong rejection after. So you could really just base this trade off 50-cent levels and whole numbers, and that's your story. But otherwise, though, Let's see where the actual icebergs were on this one. Oh, this got halted. So this got halted. Yeah, this got halted at 9:40 in the morning going down. So that's even uglier. This bounced beforehand, but it even got halted at one point on the way down. That's pretty bad. Yeah, here, this too. This one also, I'll tell you, this doesn't really give you a great read on the heat map. Doesn't really give you a good ability to easily dictate where icebergs are. When you have a lot of static, fuzzy orange lines across the chart there, you could try. I mean, hey, this looks like resistance at 155. That looks like resistance for sure. And that should complement the assumed level at 150, right? So maybe that could explain why basically it hit 155 on the kisser, and then that was it. So that gives you that at least. But otherwise, as far as like where to enter from, what looks good here, nothing. Nothing. There is nothing from my professional standpoint that I've been using Bookmap every day of my life for the last 7.5 years. I'll actually be on Bookmap's YouTube channel later on this week, folks. Check that out. But otherwise, though, there's nothing here that I'm impressed by. So, hey, in the grand scheme of chart levels and assumed levels, 50-cent levels and whole numbers, you can't really go wrong. It bottomed out pretty much right here at 101 back in mid-September, right? 101 was a real strong bottom here. And if not that, then maybe like I'll use this wick even, not even the lower one. I'll even kind of use that just to kind of say that area should flip into some formative level for support here. So made a good move. That's all. So those were like two decent trades that we had. One was pre-market. The other one's kind of still holding here right now, doing pretty good for us here for the time being. Let's go over to the SPY. So the SPY pretty much made the exact, not the exact, but almost the exact move I was looking for it to make. My exact move would have been to have it crash into 674, break over it a bit, right back down a little bit, and then have this pullback. So it pretty much did that just without crashing into 674. Why 674? Because that's why. That's just all I'll tell you right there, right? So there was resistance, a giant red candle, so a reaction off a top. Now, granted, it moved back up. Granted, it broke above it there a bit, but it's just to say it keeps cutting under it. It wasn't holding this as any sort of support. And especially from Thursday last week when the markets puked, and then Friday we rejected. Well, it's just to mention, hey, once again this morning, we should look to see resistance hold again. Now, the more it keeps banging on that door in a smaller period of time, then you should get that breakout. So maybe later on today, I mean, it could have even been this morning, but it's just to tell you the first time it went up to it, it held it, quote unquote. And then even later today on the next test of it, I wouldn't be fully convinced on a breakout right away. Wait to see this repetitively test this level throughout the afternoon. And the more it's holding there, then you have a better opportunity. Like this had a pretty good opportunity even Friday going into the mid-afternoon. But personally, I just think for as much as we dropped off from the end of last week into that Thursday it was. So, markets were a bit exhausted, but maybe we'll get that better move up heading into later today, maybe tomorrow, some point this week. Today is only Monday, my friends, so the week is young. So it's just to tell you, the first test of that resistance on the morning today, at least, I was expecting to see resistance hold and then the pullback. So that's where I really was looking at a few different shorts. I was looking at MSTR on the way down. I was looking at Coinbase on the way down. I actually also caught a short on APLD here at some point in the morning before class started. So a couple of good trades that went with the market as it had initially topped. I'll tell you though, one that didn't go with the market as much, at least later on. Market topped off at the time here. Tesla topped off there pretty much, but Tesla held, and we saw this Fausto flag build, and that's something that we'll continue along with in our classes later on today. We'll talk about charting patterns and Fausto flags, basically where higher lows and it kept retesting resistance over and over and over, just led to an easy breakout. Simple, easy, effective breakout, and that's where TSLL made the exact same move, right? What am I doing? It made the exact same move, the Tesla ETF. So tested resistance over and over and over with higher lows, good direction. And even going into late morning, you had that better move up, the breakout up. So the question really will be, is the market going to be strong enough to try and test 674 and stay there and try and get that clean break? Or is this lower highs? And if we're going to pull back, then Tesla has the chance to come back into this resistance. Then, depending on how strong of a drop we may have, who knows? You definitely would like to have this resistance flip today, right? Simple enough. Easy to see resistance should act as easy to see support. But if the markets altogether are going to begin to make a lower high and pull back going into the afternoon, then it's going to be tough to expect Tesla to make that perfect chart move and bounce, right? So where we teach you in class, well, yeah, initially resistance should flip into support. More often than not, that's what happens because you're seeing still residual bullish, residual buying pressure off of this resistance. Now the question is that residual buying pressure going to lead to the next squeeze back up, or is that support level going to get tested over and over and over and over, and then is that support level going to break? So obviously that's something that we'll keep our eyes on going into the afternoon as well. Let me get this water break in. Been waiting on that. All right, let's get through some emails right now, real briefly. So I will not have the time to go through this in its entirety, Jan. This is something likely I'll have some more time to work with you on in our one-on-one coaching program. So definitely inquire with your education advisor about that. I can try and go through a number of these at least first, though. So just to begin, AMD. Just to begin, just on my regular chart. So, Jan had a quick question regarding my TradeStation platform, right? Basically going over kind of what to look for as far as the status line. I think if I'm not mistaken, no, it's not going to play nice here today. All right, that's all right. All right, so Jan had a quick question regarding just these volume bars for the most part. And there was some text above these volume bars. And you may see it when Rich shares his screen. When Rich shares his screen, at least, you may see some text about CTU volume up, down, and gives you some numbers in red and green and white. Basically, Jan, we don't really focus on those numbers. I wouldn't factor that in at all. I don't really use those numbers much at all. I use the volume bars because it gives me a good sense for relative volume that's coming in, or if there's a large iceberg order that got broken through. So like Tesla here, you could see that on this one candle, got big volume bars right here, actually on two of these at least, at 11:30 and 11:32 in the morning. So my assumption is we had big iceberg order that got broken through right there. So at least to show, you might see like a white line at times too. I try and hide that every now and then because it can kind of get distracting. Just I'll show you here. Let's see. There we go. So this line, I really shouldn't show often at all. We shouldn't be showing that line. It's kind of misleading, a kind of a little lagging there. But what this line represents is the average volume per minute that the stock is trading. So I'll look at this number like on the white on the right side here and in the white background. Like for Tesla right now, in the last 20 or so minutes in time, the stock is trading about 182,000 shares plus on average. So that's kind of how I use these volume bars. Then otherwise, where you see like, let's say this volume bar here, this one, big green right here, right? So where you see the green, then you see the green is behind the red. The green is not standing on top of the red. The green is behind the red. So there's actually almost like double as much green than there is red if you're kind of viewing this here. Red, and then behind the red is the green. So this is even the delta, basically, the amount of green that's left over, or the amount of green that is more than the red. So it's just to tell you at least that you have the buying in green, the selling in red. Anytime there's more buying than selling, the green will show above, but it's really sticking behind the red. And then anytime there's more selling than buying, anytime there's more supposedly red than green, notice the little tiny little white dashes on some of those candles, the white little tiny little specks or dashes. That actually is the amount of green on those candles because the green is behind the red. So anytime there's more selling than buying, anytime there's more red than green, well, how do we see the green if it's behind the red? Well, those tiny little specks right there, that's kind of what you're looking at there, Jan. Would TradingView have dedicated indicators similar to these volume bars? Potentially, potentially. TradingView is a great website. Very community driven. So there's some people that code their own indicators and stuff on there too. So I can't definitively give you an indicator I know for fact, but they have their own volume bars. They're just not the same as these, though. They're not the same. And I see from your email that you sent me, yeah, like those are good generic volume bars to have. So I'm sure those would do just fine. But as far as these exact ones, I don't know if tradingview.com has those exact same type. Just real quick from Jan, kind of asking about uptrends and downtrends, asking about, for an uptrend to see at least three higher lows to confirm an uptrend and at least see three lower highs to confirm a downtrend. I don't really have that as much. It's just kind of a matter of seeing just across the chart, left to right, is the stock up or down? Like today, let's just start with like percentage change, up or down. Tesla, of course, is up percentage today, about 3.6%. So when we look at that, I'm focused on the overall move today from Tesla, especially from the market open, because we're already at 12:30 now. So not only is Tesla up today, but it's been building higher lows and it made a higher high. That's what I'm basing it off. I'm using this to base that off of. Now, if I really want to micromanage this and like go into a really teeny tiny time frame here, maybe I could say this is on a very, very, very local, small downtrend off of recent highs, but that doesn't give you the big picture, let alone the medium picture, right? For anyone that's too uh, for anyone looking in on a very tiny time frame, even too small, you're not going to be able to follow these trades in the rightful directions. You're going to be getting out way too soon. All right, but I will tell you, Jan, for any of your questions, though, I would consider just considering our coaching program. Talk to your education advisor about it because it will give us personalized time just over even Zoom to go over a lot of those questions. So we'll try and keep going through, and perhaps some of the questions that we answer on top from other traders may coincide with the ones that you had sent in. All right. So Tim had sent one in quickly. Could you discuss what you consider the levels that make a gap and a gap fill? All right. So that's a great question that came in as well. I want to point out with this too, this just goes to everyone here. This goes to Jan, it goes to Tim, it goes to Barbara, Kathleen, Grant, Michael, Stephen, Roseanne, all of us here. We do have a whole class going over gaps, squeezes, and bounces. I'm going to be teaching that actually next week live for the live course schedule, at least next week, phase two. So, Tim, I know that you're a gold student. You'll be joining me there, I'm sure, as you always are. And, we'll have a lot better time to address that at least in phase two class next week. Now, to give you the real answer, I'm not going to not give you an answer here, of course, and I'm going to give you the real stuff here, but we're going to have a full 60-minute class to break this down. Now, the levels that make a gap. Well, the only thing that's undefeated in this world that we live in, folks, it is time. Time is undefeated, and time plays a big part with gap fills. So I'll give you the Spark Note answer here. We have a gap here on Tesla from the close of this price here to the open of this price here. That's the gap. There are some people that will say that the gap, kind of begins off of this low or off of this low here. And that's not fully true. We can't reverse time. When the market closed on this day, it closed at 4:30 and 52 cents. When it opened up, 15 hours later, 16 hours later, it was at 4:23 and 18 cents. There was a gap by the time the market closed by the time the market opened up the next day. So I focus first on time. Time is the number one thing. So that's where I'll then say, all right, well, from the close to the open. So I'll look at the closing price and then the open price. That determines the true gap based on the time. But, at least today, if we're looking at this today now, as we move forward from Thursday to Friday to now, well, if Tesla could break above the high on this candle, that to me would lead me to say that there could be a better chance to have this gap then get filled. Why? Well, after the market opened on this day, it didn't just drop. After the market opened, it hit this high, wherever this little high is, and then it dropped. So if we want Tesla to continue to fill this gap going up, then it now needs to break above the high on this candle, this one. And there's a pretty good shot, if it does that, that we'll see this fill the gap towards the closing price from this day, or whatever this day was, Wednesday. So that's what I would do at least. Now with that, it's all still a matter of knowing where your levels are on Bookmap because hey, what if there's big sell order that pops up? Something like that could show up at any point during the day. So let's see. Right now, Tesla Bookmap 425, 430, big levels there already. You see 55,000, 46 plus thousand. Come on. Come on. Takes a bit to load. That's the only issue with Tesla and like a lot of these large cap stocks because it just, there's a lot of volume, a lot of data that it tries to incorporate. You could have it set to a smaller time frame, but just give it a few seconds. But you could already see a 425, 430. So pretty much the high on this candle, Tim, was 424 and 50 cents. So if it were to break above that and then really break above 425, because this iceberg's been out there throughout a good portion of the day today. I mean, all morning it was since 9:30, but it seems like it's getting even larger now. Just if you see kind of closely with your eyes, notice that it kind of goes from yellowish orange. Now it's like just all orange. Now it's just bold, big orange. So that order got larger for sure. It's not always based off the chart. That's where you want to start it off on. And then from there, it's a matter of asking where the next level is on Bookmap. Like, for instance, in theory, if this high on this candle was 425.05, then I would be more inclined to focus on this high comparative to this iceberg. You know what I mean? Because if the high on this candle is just 5 stinking pennies above that iceberg, I'd rather focus on this high. You know what I mean? I could wait 5 stinking pennies. But at least here, this high was maybe about like 30, 40 cents below where that giant sell order is. So in this case, I'd say, you know what? I'd rather wait to see that 425 get blasted through. Then I'll feel a lot better about the next leg up, right? That's kind of how I treat that. So that's something, again, that will take a lot more time in class to go through. Give me a moment. Instructor mode here today. So just keep in mind, again, that will be in phase 2 next week. That will be technically, because we got a weird week next week, don't we? We got Thanksgiving next week, of course. Love Thanksgiving, one of my favorite holidays. We got Black Friday the next day after that, which is a half day in the market. So that will be, Tim, on Wednesday morning on the 26th of next week. We'll be teaching that class live. Gap squeezes and bounces. All right. Now with that, though, I do want to get into Bitcoin. I had a couple of messages just about Bitcoin, not as much like technicals, just more or less kind of asking what my thoughts are next on it. You kept hearing me say incessantly over and over and over and over, 92K coming soon to a theater near you. I'm trying to be like silly as I'm narrating these call outs, but I'm being real. So I hope you took it to heart because we're almost there now. And we've been talking about this for the last 2 weeks now at this point. And probably even longer because I called out the 115, 116K resistance once Bitcoin bounced back up here. So I figured that we would have resistance right around this area, and then it's a matter of the pullback afterwards. So give me a moment here too. I'll try and archive that if I can. Just go back in the logs. That was back from probably the end of October, probably around like the 24th, 23rd, somewhere around there. But we were talking about that 115, 116K acting as resistance for a little while before it got hit. So give me a sec here. I'll see if I can look to try and jump back on that. The point being is that now we're pretty much back down towards that 93K, 92K. Question is, A, do we hold? B, if we don't hold, where the hell do we go next? So why did I think about 90,000, 92,000? That's why. So back from the end of last year, the beginning of this calendar year, saw Bitcoin hold around 90,000, 89,000, 91,000 on a variety of wicks. It's not going to hold it perfectly. It's a 90 plus $1,000 asset back then. Obviously it moved up as high as 128,000 or so. So it's just to tell you that levels aren't going to hold perfectly. This is just where now I'm looking at consistency, and a large amount of these wicks were at least down towards 91,000, 92,000 if you want to go up a little more from there even. These. So that's just where I'll bring to your attention at least over I don't know if this is going to show it. It might. Not all the way, not all the way. So I got to bring this here up for you. There's my drawings, all my artwork at least just before. Give me a moment. So Bitcoin hit pretty much 92,900 last night, or it was like yesterday in like the early evening, I guess, and bounced up a little bit. But then here we are right back down towards yesterday's low. So I think that we're probably just going to get this move down towards 90,000, 92,000, just generally speaking. And then from there, we'll see what the reaction is. If we break this, oh, we're going much lower. We're going probably down to like 83, 82, down towards these lows here, right? And then if we break that, then even more. But I feel pretty good about 91, 92,000 to act as big support. Listen, it built out pretty well for a good amount of time, for months and months, for like half a year. So if you know your levels, then you should feel confident with trying to be a buyer. But this is where I'll tell you, a lot of traders are focused on crypto and Bitcoin on leverage. They'll try and do leveraged trading, futures contracts that relate to Bitcoin, margin accounts through decentralized exchanges. And a lot of them are sketchy. A lot of them aren't structured the way that like the NASDAQ is, or the US indices are. So there's a lot of cause to have big liquidation cascades. And that's essentially what happens. Where was it here? If it wasn't on Bitcoin itself, where was it? It was on one of these candles. Doesn't even show it as well on Bitcoin, actually, even more on Ethereum, I think. It was one of these two back from either I think it was the mid-October one. It was the 1010. 1010. This was the largest liquidation in crypto history. This candle here, and when Bitcoin tanked here, because you had all of these smaller, tinier exchanges and coins that got wrecked. This thing went from 28 down to 17, right? One of my favorites, Cardano ended up tanking over time here too, and it down over like 40% that day. So I'm just pointing out to you that you're going to see probably one more big liquidation. And it's probably going to be based around this 90,000, 92,000. And I'll tell you, there's probably a lot of people that have stop orders placed right below this support area here. So it's very possible that we'll see Bitcoin look to crash into this, like go under it and then back over it. The key is under and over. If we get under then over, it makes cause to take the trade off of like 91, 92K. But if we end up seeing this slash below this tonight, which I think it is bound to do this tonight, but if it keeps dropping fast, that is such a bad sign for crypto. Granted, it could just be in one wick where it slices down, then back up, and that. So just be leery of that. Don't try and catch the falling knife. Always try and look for a little confirmation afterwards, because even here you could just see, you have one wick down here. That wasn't the, bounce. That wasn't the moment where it bounced back up. It took months for this to build support, then it bounced. So I'm just pointing out to you here, even if you see this drop into this level, don't just buy on the bid, because this could break under and drop a lot. And then that support becomes resistance again for a while. So you don't want to take an irrational entry just based on like, oh, it's there. You got to read the room. You got to say, all right, well, like, all right, is it going to break below the level and come back up? Or is it going to break below the level and stay below? So if it breaks below and stays below like that, that's, I mean, I don't think it'll drop that low. You know, if it breaks below and stays below, that's just not a good sign because it'll take longer for this to recover from. But if it goes under and over, it at least triggers an entry. Then the goal is to see this hold support, and then move higher pretty quickly. You want to see a pretty quick reaction off the level, irregardless. So coming up, we'll see what happens this afternoon, even. But a lot of these liquidations do happen not during market hours, not during market hours. So, let's see if I could even go back on this here for you. This would be a nice little history lesson because I brought this up like, months and months and months and months ago. So let's revisit this actually. August 5th. Yeah, this guy right here. August 5th last year. I remember this like the back of my hand. Um, I don't need to give you more details on this, but I go for a nice run. I come back, jump in the shower, come back out. I check my phone, and then Bitcoin is dropping about like 8, 9, 10,000 points in maybe 5 minutes time. It was insane. The majority of this wick came within about 5 to 10 minutes. That's insane. Go back to August 5th of 2024. So let's see if we could do that on a 15-minute chart. I don't know if I can go back that far on a teeny tiny 15-minute chart here. Probably going to take me a while to try and circle back here, but oh no, I can't use that. All right, maybe on a 1 hour chart I can go back that far and see. But I want to show you at least that wick because insane. Yeah, check this out. This is it. So granted, it was dropping to begin, but on this 1 hour candle here, this was at 2 a.m. And then this was the one in the evening, even beforehand. This is the shower one. But then afterwards, right? So these liquidations take place before the market opens, or otherwise after the market closes during the after hours. It was already dropping from, this is 4 o'clock p.m. Dropped off a little bit, dropped off a little bit. And actually, at the time here, this is just a quick, story. So a lot of exchanges now offer 24/7 futures trading for Bitcoin, crypto. They just started doing that pretty recently, though. That hasn't been the case. So really, they would close their futures trading. Like you can't buy, you can't sell your leveraged positions from 5 to 6 p.m. Just check that from 5 to 6 p.m. So imagine they close up at 5 p.m. They're like, okay, hour break, we'll come back. And then just like pretty much immediately, just instant drop. And then it only continued to get worse. So I'm just telling you, a lot of these moves happen after the market closes. You think this is bad now? Come back to me like in 24 hours. You might see a big drop and then a wick back upwards. So just be on the lookout for this area to be support, this 90,000, 92,000, 92,000-ish. It's not going to be perfect, but it's going to be a good area to see support get built off of. That's all. Now that would also transcribe towards swing trades on stocks like, well, Hood's MSTR is going to be tougher, but Robinhood, I mean, this has been one of the healthiest charts in the U.S. equities market all year. So for as much as Bitcoin's been dropping, yeah, Hood's been taking a bit of a hit, right? Comparative to, SPY, comparative to like a Nvidia, I feel like Hood's been dropping off a little bit more, breaking a local low a bit there. Coinbase definitely has broken support, but these are stocks that I think that will get good benefit from this bounce. MSTR is another story though. MSTR has been like almost taken behind the woodshed here. There's a lot of people that are very bearish on MSTR because they don't like MicroStrategy. They don't like the way that Michael Saylor has been buying Bitcoin via MSTR and the whole means behind it. They think eventually he's going to get blown up. So they try and short it to go against him. That's why this has been taking a lot larger of a hit over the last month or so. Granted, hey, if this goes up, it'll go up big. It'll kind of be like a Tesla situation where the shorts have to cover and it'll make a pretty strong run, 1 or 2 days there. But that's just where I'll tell you otherwise. If you're looking for a healthy company to try and swing, you don't need a company. You could just swing trade IBIT. IBIT's the BlackRock Bitcoin ETF. So this would go perfectly with the Bitcoin bounce, like to the T. That's your best bet, truly. Otherwise, ETHA, that's the Ethereum ETF via BlackRock. If you're looking for a real company, though, I would suggest Hood. Coinbase would be a pretty good one, though. Otherwise, I think Coin's a pretty good one to work with there, too. Outside of those, I know Iron's done great over time, over the last year. I think a lot of that has to do with them dipping into the nuclear sector more than anything, because they made the same type of parabolic move that OKLO and SMR did pretty much. They didn't necessarily move as closely with IBIT at that time. As IBIT was making shakes here and an eventual top, but then a bottom, basically the IREN trade was running way higher. So even though IREN is affiliated as a Bitcoin mining stock, I think that the whole nuclear thing and AI data center thing helped them really take off here. So it's just to tell you, it's a strong chart overall. You could try and look for a swing there, but I think your best bets would be Hood, and I think it would be Coinbase otherwise. Coinbase, you got to see hold support. Coinbase probably needs to drop a little bit into this area to build support, and then you get your bounce. Hood, it is pretty much at support right now. It bounced off of it Friday even. So as long as it kind of metals around this area here, builds higher lows, there's a good shot for more right away. If Bitcoin drops going into tonight, then who knows? There's a chance that this gap might get partially filled as well, maybe entirely filled. Kind of this area here, basically, but this would be the true gap fill. Drop down and fill this gap. That's it. All right, folks. Hey, we're going to wrap up in just a few minutes. Jan, let's see if I can go back to your email at least before we wrap up. We'll try and get through a couple more of his questions at least there. Give me a brief moment or so if I can. Try and go back on that Bitcoin comment that I made a little while back about that 116. But we've been talking about that for a little while, BTC basically, in hopes of this pulling back to 92 or even 90. We'll see what happens this afternoon. All right, Jan, let's go through at least try and get through one or two more questions from his email. I'm going to just do a medley of them or kind of skim through them briefly, Jan, because a lot of them pertain to classes and certain times where I'm teaching, kind of comments that I make here and there. So basically, the wider the spread becomes, the larger the candles become. Oh, give me a second here. Oh, my TradeStation platform just collapsed on me. Real time right now, if you're wondering what just happened right here, my TradeStation just froze up on me and crashed. Well, I'll just have Bookmap up and we'll kind of keep going for right now, folks. As long as you can still hear me, see me, we're good. But, Jan kind of asking, the wider the spread becomes, the larger the candles become. Sometimes the spread is less important while how fast the candles are moving. He needs more clarification on that. So it's just to tell you, as far as how we categorize these stocks from slow to fast, category 1 to category 5, right? Think of it like a hurricane, right? If you're down here by me in Southwest Florida, it's over in Romania. But just to tell you, if you're over here, Southwest Florida, you know that we get a lot of hurricanes. Category 1 hurricane, not so bad. I think we're going to survive. Category 5 might blow the roof off the place, right? When it comes to blowing a roof off a chart, that sounds pretty damn good to me because the stock is popping and going up. But the faster a stock is moving, we're going to label it as a category 4 or maybe even a category 5 stock. But kind of what you're asking about, we'll focus on the size of the candles. And that's where this indicator I show in class, my TradeStation platform just crashed right now, but called the average true range, ATR. I only show it in that class. I don't use it when I actually trade, but I show it in that class because it's a good guide for showing you how big or small the candles are over the course of time that you're looking at. Otherwise, though, the spread is extremely important. The spread's like the next most important thing, if not like 1A, 1B, it's like 1 and 2. So you always need to focus on the spread. Stocks that move faster typically will have larger spreads. For someone that's a brand new trader of CTU, like with very minimal experience within the stock market, we do not want you or encourage you to be trading category 4 or 5 stocks, the stocks that are moving crazy fast and the stocks that have big spreads. Why? Because there's a higher likelihood of your roof getting blown off your house. And I'm not referring to the stock going up and having the roof blown off the chart. I'm talking about having your account blown up. So that's just where I'll point out that the spread is so important. The more that we kind of watch the order book and give a good old eyeball test on the spread, we'll determine, all right, is this something I should be meddling around with or not? You know, if for anyone that's making money fairly consistently, and if especially if they're at like 500 plus a day, I would encourage those traders to try and focus on more volatile stocks, tougher trading opportunities. But otherwise, at least as a new trader that has minimal experience to the market, but not just those people, but for new students, listen, if you got 10, 20 years of experience, I hope that's experience with making money, right? Because there's plenty of people that join CTU and I hear it from them. Yeah, I've been around for 20 years. Okay. Are you making some money this year? I've been inconsistent for the last few. Okay. Experience doesn't always mean good things. So for anyone here that has a wealth of experience, but you're new to CTU, I would rather you focus on stocks that have tighter spreads consistently and stocks that aren't necessarily making these giant, crazy candles. Something like Amix this, well, not even that because it's cheap. I want something that's like not even like dirt cheap. XPEV. XPEV is a stock that was moving earlier today. They came out with some sort of earnings. This type of stock here, at least, it's not like a good buying opportunity right now. But this stock is on a 1 cent spread, maybe at most 2 cent spread. My platform crashed, so I don't have my real platform up showing you the bid ask and the spread and the level 2 and the level 3. But I could just show you from my level 4 screen here. These squiggly lines are really tight knit to each other. These squiggly green and red lines. That means that the stock is trading a very tight spread. So right away, I could tell this is a stock that at the minimum has a tight spread, has good orders out there on the book. And for that reason, hey, it's something that I find likely more tradable than not. So that's just something I would use to focus on. But hey, for something like SGML this morning that was moving up and popping and making this big run, this stock not only had a larger spread, but the orders were much more scarce and spread out and open on the order book. Granted, it can make a larger move because of that going up, but granted, it can make a larger move going down because of that. So if you're not as experienced with seeing this type of movement and reacting to a stock that goes this fast, then I keep forgetting my platform crash. But then otherwise, I'd rather you focus on stocks that have better liquidity, consistently tighter spreads, and at least looking at level 3. If you're on the Nasdaq Book Viewer Yan, if you're on the TradeStation Matrix Yan, look to see how big the orders are at the other prices out there on the bid and ask. It's not just about the spread. What about the rest of the other orders out there on the book? Do all the other prices on the book have orders for them to buy or to sell? If the answer is yes, that's a good thing. If the answer is no, and if there's like very tiny orders at a lot of these prices and it's like kind of empty, that's not that good. That's not something I'd encourage new students of CTU, albeit that have experience, let alone new traders with minimal experience to try and follow. Before you swim in the deeper waters, you got to learn to swim in the shallow waters first, right? So we're going to wrap up at least for right now, folks. We're going to finish up at least Traders Talk here. Leda, appreciate you as always on the YouTubes right now. Chatting earlier. Don as well. Gator Don, how about that? Yeah, flash floods alongside those hurricanes, Don. Knock on wood, haven't had any come across Florida at least yet. I think we had a couple that curved way left or way right, I should say. But I think we're pretty much nearing the end of hurricane season. But hey, for Don, for all of our members on social media, Facebook Live, LinkedIn, Twitter, YouTube, etc., popping up lower left, just at Cyber Trading U. Be a friend, tell a friend, look to hit the follow or subscribe button down below, and spread the good word of what we preach here at Cyber Trading. Just looking to follow the big money, follow the big orders out there for all these trades that we're calling out throughout the day. Something like Nvidia right now approaching big support that it hit earlier this morning. Nvidia had big support at 185 right at the market open, ran right into that thing, made a slingshot. Perfect under and over move. Well, guess what? It's coming back down to it again coming up here this afternoon. Wait for it. There we are. So we'll see what happens to stocks like Nvidia, stocks like Tesla, the ANVS. Didn't really have much time to go into the Netflix split, but we're gonna be discussing that at the least inside our live trading room throughout the rest of the day today. All right, but for all of us on Facebook Live, LinkedIn, Twitter, etc., we're going to jump back to our trading room right now. Leda, Margaret, Lynn, and Randy, Graham, Bill, Tim, Mike, all of us there right now. Stay tuned. Our next broadcast will be there for you at 2:30 Eastern, just going into the afternoon meeting. And then also keep in mind for any of our students here, keep in mind we got the Phase 1 course continuing. Phase 1, lessons 6, 7, and 8, we're going to continue with today, and then as well as on Friday this week. So keep in mind at 3 o'clock Eastern later on today, we're going to be continuing with lesson number 6, charting patterns. Got to fit the water breaks in eventually. Folks, hey, with that said, we're going to jump back. We'll be back later on today at 2:30 Eastern for our next broadcast. Take care.